Today is going to be a fascinating topic because I'm going to be focusing on what would you do, how would you invest if you either inherited, made $10 million, or if you had earned $10 million. Maybe you have a great invention and you want to know what should you do with this $10 million if you have it. Now, I would actually break these components into 10 different types of investments, and most of them are pretty diversified. For instance, the very first thing for 10%, so that'll be $1 million, I would put into VYM, which is the Vanguard high yield investments. It's basically high yielding dividends. That should, I believe right now the dividend rate is 3.5%, which means that you would make about around $35,000 a year just from this one investment alone. And of course, long term, it's very likely that this will continue to appreciate. So that's number one, VYM, the Vanguard high yield. The next investment I would put money into if I had $10 million would be 500,000 Visa and 500,000 in MasterCard. And I choose these because I believe long-term credit processing is going to continue to be a big industry long-term. And so it would make sense to have an opportunity to continue to accumulate the large gains that are very, very likely to continue to exist in the stock market long-term in these particular industries. I think these have the enormous potential to continue to outperform any indexes. Number three, if I just wanted pure diversification, I would put $1 million into SPY in order to have a broad diversification of the S&P 500. And it does pay, I believe, I think 1% dividend or something. So this is not one you would really necessarily buy for the dividend. You would buy it in order to really just be broadly diversified and gain the benefit of being into as many stocks as possible and not having too much to worry about on a day-to-day basis. And number four, I would put another $1 million into VO, which is the Vanguard Mid-Cap Index. The Mid-Cap Index is a blend of, on the Vanguard, the VO, it's a blend of the growth and value. So you're not getting all growth, you're not getting all value. And I think this is a really, really good one for the long run because mid-caps tend to outperform small caps and large caps. So it's a great blend of both. And another investment I would choose, I would put $1 million into Vanguard's VIG, which is the Dividend Appreciation ETF. What this stock index does is it invests in companies that have a history of continuing to increase their dividend year after year. And there are quite a number of stocks that do that. And it's nice to have that because if you are trying to live off this money, it's nice if the income actually is continuing to increase over time, which helps you to outpace inflation. So that is a good choice. The Vanguard Dividend Appreciation Fund, VIG. And the fifth portion of the account, I would put in $1 million to Realty Income, which delivers you a monthly paycheck every month that actually continues to grow on every few months. They actually increase the dividends. Now, it's true, Realty Income is not an exciting stock. It's actually quite boring in a lot of ways, but we're talking about someone who already has $10 million and just wants to sleep well at night and know that they're continuing to make a pretty good investment. So at this point in time, I think that they might not be as concerned about aggressive growth or things like that. So O is a fairly good one. Now, if you want to be more conservative about it, you could put 50% of that 1 million into Realty Income, and then the other 50%, another 500,000 into Stag, which deals with warehouses, and it also pays on a monthly basis. So that's another one to consider. It's one way of diversifying from those kinds of investment opportunities, and I think it's a good one to consider. So both Realty Income, Stag, you could put either 1 million into Realty Income, or 500,000 to Realty Income and 500,000 to Stag. Another thing to invest $1 million in a $10 million portfolio would be Vanguard Healthcare ETF. That's the VHT. Now Vanguard is known for having a low expense ratio, so it's actually that's actually 1+. But what I like most about the Vanguard VHT is that healthcare tends to be something that's immune to recessions. People always need healthcare, regardless of the market or economy. It's just something that's always necessary. People are always going to need pharmaceutical products or hospitals or health insurance companies. It's just something that's always necessary. Now, here's a cool thing: it's a sundial, and it's it's not up to the exact minute. It seems this says 3:14 on the phone, but it says it's. One could say, what time is it? It's time to invest in VHT. That's what time it is, and that's mainly because. You can show the wire shadow. Oh, okay. To show what time you show it. It says it's 3:20 right now, and on the phone. You can't hear it because the microphone is aimed that way. Oh. Okay, so on the phone here it says 3:20, and on the sundial, well, actually onto my phone it says 3:15. So it is off, I think, by 5 minutes. So it still is the. Do you have to redo it again? It still is the proper time to invest in VHC because there just always is a demand for healthcare, and the only thing I think is a real weakness in healthcare is if there's some government regulations that really hampers it. But other than that, I do recommend. I would put the 1 million out of the 10 million portfolio into VHT. Another way to invest in a $10 million portfolio is to put $1 million in Nasdaq. Now I know that sounds a little bit scary to some people, in fact, because we all saw the 2000 crash, right? Yep. The 2000 market crash. But I'm only saying to put $1 million into that's 10% of your portfolio into Nasdaq. QQQ gives you exposure to Nasdaq. And why Nasdaq? Why not just the S&P? Well, the major reason why is over the long run, technology tends to be something that tend to be very, very efficient in the sense that you don't need as many employees. You get to keep costs down. Think of like Facebook or Google. They don't have that many employees relative to the size of their market cap. They really are just cash machines. So $1 million into the Nasdaq, I actually think that actually would be a very, very good idea long term. And since it's only 10%, I believe that you're minimizing your risk to some extent. Another place to put money in a $10 million portfolio would be $333,000 in PayPal, $330,000 in American Express, and then $330,000 in Square. Now, why do I say that? It's mainly because I think these are a little bit more speculative, but I think that at the same time these are related to the financial industry, where the payment industries are continuing to be a really big thing because people are abandoning cash. They're really not using cash like they have in the past. So I do think that this is something to keep in mind. I think that by focusing on these kind of credit processors, I think that they enable you to have an opportunity to really deliver outstanding earnings. Especially because when it comes down to these companies, it seems as though, even though you've heard about them for a long period of time, they still are relatively new in terms of their growth phase. This is a time period where people are really abandoning cash like never before. I actually remember when, if you went to the supermarket, it was considered weird to use a credit card for like a $10 purchase. But nowadays, it's actually a very, very common thing. In fact, it's now weird to use cash instead. So that's how I see it. So if you have a $10 million portfolio, where's another place to put money? I would put $500,000 in, which would be about 5% of the portfolio, into crypto. So that'd be $250,000 in Bitcoin and $250,000 in Ethereum. I think that that's only 5% of the portfolio. I know that some people recommend 1%, but I would say it's okay to be a little bit more risky on this, 5%. So even if it does go to zero, that's 5% of the portfolio, shouldn't be too bad. But at the same time, this offers outstanding potential returns long term. So that's something to keep in mind. Another 500,000, I would put another 500,000 into Apple stock. Now, I normally wouldn't recommend something like this, but I believe that Apple is the leader long term in terms of technology. Think about how hard it is to compete with Apple. If you, let's say I wanted to start a new computer company or another cell phone company, having the first mover advantage allows Apple to have so much money that they can invest it in R&D, and they spend a ton of money in R&D to have the absolute best phones, best computers. And it's really hard for someone to do that from scratch. That's one reason why after some people even call this a monopoly at some point. So while I recommended half of this 1 million to be in the 2 cryptos and then another 500,000 in Apple stock. That's how I would invest that part of that million. And the last million out of a $10 million portfolio I put into the Vanguard small caps. It's the stock symbol VB. Now, small caps are very volatile, so this is not something you really want to trade. This is something that, well, you could trade it, but I don't recommend it. I'm assuming you want to be a long-term holder and just get as much capital gains as you can. Now, over the long run, small companies tend to deliver exceptional performance, but in addition to that, though, there's a lot of volatility that you might have to sit through from time to time. Then there might not even be dividends to get. Now, if you choose this portfolio, I believe it would be an amazing thing, and you would actually probably grow it pretty substantially from the 10 million. And of course, there might be dips along the way. Maybe it ends up being 7 to maybe ends up being 6 or 7 million for a period of time. Maybe you're like, Michael, all I need to do is to have a $5 million portfolio, start out with 10 million, and following your advice. I know some of you are going to make that criticism, but honestly, I do believe long term it would actually work. But what do I know? I recommend you always seek a professional to get real guidance who can really work through this. Now, if you do follow this, the great thing is you get to also see this fantastic view. Look at this view that I'm looking at. And isn't that a fantastic view out there?
And it's the back side of the observatory, a view that most people outside of Los Angeles don't see from this angle.
Yeah, most people probably don't see it from this angle, and it's a really fantastic view. And it's really outstanding up here. Fantastic view, fantastic.
And if you get millions and millions, you can live on the edge of the hill, build into the hillside right there. That's probably